everyone, it's Tom here with InvestorJunkie.com. I hope you're all having a fantastic day today. So the annual inflation rate just hit 9.1% in June in the United States, which is the highest it's been in decades. And if you've gone to the grocery store or refilled your car recently, I'm sure you have a good idea of what's been going on. Periods of high inflation can be very, very tough on someone's monthly budget. And for investors, it can also be a tricky time because you want to protect your money rather than just hiding it under your mattress. So in today's video, I'm covering 5 of the most popular inflation investing strategies you can use to still build wealth during tougher economic times. One of the ideas in this video is currently paying 9.62% interest, basically risk-free as well, so definitely don't want to miss that one, so let's get to it. All right, so number 1 on the list of inflation investing strategies is to invest what's kind of known as these recession-proof sectors. Now, no sector or industry is really 100% insulated from a recession or really high inflation rates and tough economic times, but there are some sectors that are a lot more insulated than others and historically don't perform that poorly. Energy is one great example. I mean, regardless of the inflation rate, people still need to heat or cool their homes, and so dividend-paying energy stocks or ETFs can be a reliable investment during really high periods of inflation. Healthcare and consumer staples follow a very similar logic. I mean, regardless of the inflation rate, people need healthcare or they need to go to the grocery stores. Even with high prices, it's not going to be something they cut spending on. Really, during periods of high inflation, it's the luxury goods and areas of discretionary spending that get hit first and typically get hit the hardest. But if you don't want a high inflation rate to deter you from investing in the market, sticking with these sort of recession-proof industries could be a good bet. Okay, so for number 2 on the list of inflation investing strategies is to invest in I-bonds. And I mentioned one of the ideas in this video is currently paying 9.62% and is basically risk-free, and that's this idea. So I-bonds are saving bonds that earn interest by combining a fixed interest rate and an interest rate that's based on inflation. The inflation-based interest rate is set twice per year, but right now I-bonds purchased through October 2022 will pay 9.62% for 6 months. After that, the inflation-based interest rate is going to be determined once again. So you can buy $10,000 per year of these savings bonds just directly from the US Treasury's website, and you can actually get an additional $5,000 per year if you use your tax return to purchase more bonds. So that's $15,000 per year. You have to hold the bonds for at least 1 year, and that is very important to note. And if you sell them earlier than 5 years, you lose the last 3 months of interest. However, since these bonds are backed by the US government, they're very, very, very low risk. It's much less risky than going with a corporate bond where maybe the corporation goes out of business or something like that. So it's pretty much designed to protect your money. And since part of the rate is tied into the inflation rate, again, it's, by design looking to help protect your money during periods of high inflation. Now, the main downside is that, again, you can only purchase up to $15,000 per year, and you have to hold these bonds for at least 1 year. So you're locking up your money for that period of time. Some investors also argue that you can still get much higher returns if you stick with other alternative asset classes or stay in the market. So I'll cover some of those ideas in a little bit, but the bottom line is if you want a very safe vehicle for protecting your money during periods of high inflation, you could definitely consider I-bonds. All right, and number 3 on this list of inflation investing strategies is to put your money into real estate. So this is another sector that traditionally has done pretty well during periods of high inflation, and landlords and investors alike kind of gravitate towards real estate because it lets you earn rental income if you're a landlord, and if you're just investing, you can also earn through dividends or property appreciation. So again, the idea here is that even during periods of high inflation, people need to live somewhere, so they're going to be renting, and real estate property prices might not take that much of a hit. So as for how you can invest, a lot of investors gravitate towards things like REITs. You can also go down the crowdfunding route with websites like Fundrise that let you invest in income-generating real estate with just $10. So there's plenty of ways you can start to dabble in real estate, even if you don't have that much money. Now, rising interest rates from the Federal Reserve can be a risk here, especially if you're a landlord and you're thinking of buying properties or, maybe leveraging debt to get a couple of rental properties. But as an investment, REITs or crowdfunding options are typically a bit less risky. And what's nice about REITs and some crowdfunding sites is that they're also more liquid than owning property itself. So again, if you're looking to diversify during periods of high inflation, you can consider real estate. All right, number 4 on this list of inflation investing strategies is to invest in precious metals. It's often said that precious metals like gold and silver are very, very good inflation hedges. And historically, when inflation's been high and the dollar's losing value, a lot of people do flock to commodities like gold and silver. So what's nice about assets like gold and silver is you actually have a lot of different ways to invest. For example, you could go out and buy gold bars or coins or jewelry and actually own the physical metal itself. You could also invest in different gold or silver ETFs or different mining stocks from companies you wanted to invest in. Now, one of the main downsides of investing in assets like gold or silver is that they traditionally don't generate income. So you might buy gold bars and keep them in your safe, but they're not paying you every month. You're just kind of banking on them to appreciate. So again, this is why some investors will turn to mining stocks or ETFs that do pay dividends instead. So it's honestly quite an interesting way to diversify your portfolio and to kind of protect against inflation, although a lot of investors stay in that 5 to 10% range in terms of asset allocation, so their money is still working for them to produce income. All right, and the fifth and final inflation investing strategy you can consider is just to invest in other alternative asset classes, kind of following the same logic as investing in gold or silver as an inflation hedge. Don't worry, I'm not about to shill NFTs unless you want me to, because in that case I will totally shill NFT projects. No, jokes aside, I'm going to talk about some alternative asset classes that aren't precious metals that you can consider during periods of high inflation. And again, there's actually quite a few interesting examples here. So one example is just to invest in artwork, and platforms like Masterworks actually let you do this. You can buy fractional shares in blue chip artwork and diversify your portfolio that way. Platforms like Vint and Vinovest also let you invest in fine wines, which again, some investors argue is a great inflation hedge. You can invest in farmland with companies like AcreTrader. You can even invest in cattle right now with companies like Agridime, and we have content on investorjunkie.com about all of these different alternative asset investing platforms for you to explore. Some investors have also been using things like cryptocurrencies, so Bitcoin or Ethereum primarily, as hedges against inflation, although we've kind of seen lately that Bitcoin isn't as good as an inflation hedge as previously thought, because it does correlate a little bit with market movements, so kind of on the fence with that one. But the bottom line is, again, tons of different alternative asset classes out there you can add to your portfolio. Really just be careful with what percentage of your overall portfolio you're allocating to these alternative assets, and know that many of them are not liquid whatsoever. So always read the terms and services of any platform you're using, and make sure you consider liquidity when you're making these investing decisions. So there's really no denying that 2022 so far has been a pretty painful year in terms of inflation, the market, crypto crashing, everything like that. So far it hasn't been that good. But you can still find ways to make your money work for you even during these tougher economic times. And when you look at a lot of these inflation investing strategies, they're often better than just putting your money in a very basic savings account or putting it in a piggy bank or under your mattress where it doesn't earn anything at all. So hopefully at least one of the inflation investing strategies in this video helps you put your money to work so you still generate some returns. If there's an inflation investing strategy I missed, or there's something you're doing this year, definitely let us know down below as well so other investors can chime in and we can talk about it. Thank you guys so much for watching. This has been Tom Blake with investorjunkie.com, and we'll catch you guys in the next one.